Vinit Sambre joins us. Let's take a conversation forward and understand what he makes of the current market trend. Head-Equities with DSP Mutual Fund. Vinit, good morning. Thank you for joining us. What is your market view? Enough and more,
Hi.
chatter and narrative is that markets are expensive, lie low, manage risk. It's almost like a frenzy in mid and small cap stocks. Do you think a lot of this universal chatter which is there on social media and in television studios, which everybody is talking about adopting cautiousness, is that true?
Good morning, Nikunj and the team. And so I think principally, when we look at the long data of analyzing the markets and looking at the volatility, how equities generally have been, I think the last 3-4 years have defied those parameters. And in a way, every time the markets actually hit a new high, while definitely there are always a few fundamental reasons which back those rally. One can't purely be on non-fundamental, keep going on for such a long period of time. So I think, and also there is a fact that markets tend to get exuberant at certain points in time in terms of valuation. So I think we have to keep a balance of both and try to understand what the metrics are presenting. So the way we are thinking is that one good part for the market is that definitely we see that there are ingredients for the long-term growth to be there as far as the economy is concerned, broader economy. And the other good part is that in this economic recovery, we are seeing broad basing of various sectors really participating. So that is again a good aspect of the market. Now, the other thing which you mentioned is clearly around the valuations, which definitely have also not been as reasonable when one looks at the rally over the last few years, especially in the mid and small cap. So I think what adjustments one needs to make is that one needs to be here for a long haul, because the economic recovery definitely will see us through the next 4-5 years. And in the short term, I think the expectations needs to be sort of moderated some bit, because at what point one enters in the market will really define in what periods one is going to get those kind of returns. So maybe if one is talking of 5 years, we are pretty okay. These falls should be bought into. And one is looking at really very short-term view. I think the cautious stance also makes sense, because we are also seeing that the earnings could decelerate over the next 1 or 2 quarters, which will be one point of discussion maybe as we move ahead in 1 or 2 quarters, and that will have some bearing on the market returns overall.
In your understanding of earnings, last 2 or 3 quarters we are in for an earnings upgrade cycle. You think that that upgrade cycle will continue?
No, in fact, that's what my point is. If you look at the large sectors now, Nikunj, what were contributing to the earnings growth, banking was one which was actually contributing to the growth momentum. And there we see over the next this quarter and maybe the next quarter, we'll have them actually reporting slower growth. And clearly, this is because of the NIM compression which they are witnessing. We've seen that the IT pack, the top guys, they have delivered, and you have seen the deceleration in the growth metrics over the last 2 years and versus the 9 months of this year and this quarter as well. So these are the two large sectors, really accounting for almost maybe 52% of the profit of the Nifty overall. And where we see these trends, and along with that, you have consumption which is still not picked up significantly, where the benefit was coming from lower raw material price, which will also at some point fade away because the raw material price are now stabilizing. So my point is that as you move forward over the next 1 or 2 quarters, we'll see the growth matrix decelerating from where we were, and this whole momentum maybe to some extent moderate some bit. And qualitatively, what will drive looks like the earnings growth will be the OMCs, the oil companies, where the profit numbers were pretty low. So on the low base, I think they are going to deliver high growth metrics. So the quality of the earnings also needs to be sort of kept in mind when one is looking at the broader valuation picture for the markets.
So tactically then, Vinit, what sectoral allocations or jugglery are you making right now? I mean, IT, for instance, has made a comeback. A lot of people are now pinning their hopes that perhaps private banks will deliver because they are the ones which haven't really moved much, as have some of their smaller PSB counterparts as well have. Anything wherein you're increasing weightage, decreasing weightage, increasing allocation?
Yeah, so see, clearly the way we are positioned, and I think we've been positioned in this manner for a while, as a broadly, most of the funds is banking. We are overweight despite the upcoming issues around the, let's say, margin compression, because we believe that these are going to be more temporary, 1 or 2 quarters, and then base formation will take place. But clearly, banking is also a sector where you have the credit quality, which is at the best stage today, and the valuations are not very expensive. So that gives us a lot of comfort in terms of owning the banking sector. And we've done a lot of analysis. The long-term analysis suggests that banking overall generally tends to outperform the broader Nifty over a long period of time, and especially when we are thinking of a recovery, economic recovery, broader economic recovery, banking should participate. So while I mentioned that the growth matrix could look challenging, but that's not a sector one should not own or reduce. So we are having a decent exposure out there. We have, in fact, sort of placed ourselves slightly more defensively over the last 1 year, and our position in the healthcare sector is actually a depiction of that positioning. There we believe that while across the board we are seeing trends maybe changing, as I mentioned a few minutes back, but in healthcare I think on the conversely we are seeing that the growth momentum is actually coming back. The sales have been reasonable sales growth. We have profitability which is actually improving, because the cost matrix have sort of supporting them now, which should continue over the next 1 or 2 years, and the valuations are not very rich or expensive. So I think in a way we have placed ourselves defensively. The other thing which you asked is how are we thinking in future. So my other sense is that consumption broadly has been an underperformer for a while, and for right reason. We've seen that the overall demand momentum is slow, especially at the bottom end of the pyramid. And that's where my belief is that if the economic recovery is what we are talking about, if the government spends continue, at some point we will have the consumption also recovering. Maybe the inflation adjustment takes place and people are okay with the high prices at some point in time, and the consumption basket should also sort of improve. So that's a space where we are incrementally looking to gradually maybe build some exposure, is what I can say.
Right, Vineet, morning. Wanted to also get in your take. If one had to just cherry pick perhaps within the consumer basket, where is it that you would look at individual sectors where you're seeing perhaps a pickup in demand, maybe inflationary pressures as well cooling off, and rural making a comeback?
Yeah, so see, the way again to think about is, consumer discretionary, I think is a category which will over the next few years outperform the staples, because in general, as the income level rises, people tend to spend more on their discretionary items as compared to the staples, or the fast moving consumer goods space. So I think from that perspective, we are looking at areas like QSR, maybe the apparel companies. These, anyways, we have high exposure in the auto segment, which has done well, and that's in the upcycle right now. So that also maybe comes within the broader consumer discretionary basket. So for us, as of now, within consumer discretionary, auto has been an overweight. But incrementally, as I said, we are open to look at companies within, let's say, QSR or apparel type of names or a retailer. So that's where the consumption sort of basket is where we are sort of looking at. Now, talking about the rural recovery, I think the way to play would be the entry level two-wheeler bikes or the FMCG companies, which are more exposed to the rural side of the economy. And if that trend again picks up, that those is where one can actually position oneself.
Vineet, so let's look at IT. We've seen a bout of short covering which has come in IT. Now, specifically on IT, there is mid-cap IT, there is large-cap IT, and there are these niche companies, like Raid Game, MapMy India. Some niche players have got, in a sense, created, and hopefully more will get created as the economy and the IPO market evolves. What is looking interesting as a medium-term theme and as a long-term idea?
So, frankly, Nikunj, IT has been a bit complex in a way. We are broadly, let's say, equal to underweight across most funds. We are not overweight in a way. And the whole stance was that as the world goes through a slow period, the IT also will sort of reflect that. And In terms of business momentum, maybe it is reflecting, but not in terms of the price momentum, because people are looking forward, looking ahead. As the interest rate globally, let's say, cools off, it gives some kind of boost to the economy, and that's what maybe people are pricing in. So from that perspective, IT, I think overall remains a decent sector to be in, considering the cash flow generation, the dividend payouts, and the long opportunity which these companies will target. My judgment would be that it is good to be with the traditional guys, because what is happening, I'm hearing the commentaries coming out from these companies, and all of these companies have started talking of the generative AI space, and the requirement that most of the customers are now wanting to adopt that into their whatever softwares they are working on. So I think that's going to be an important space which is going to grow, and I don't think our companies are going to lag behind, is what it seems like today. While it's very too early to comment, and I'm not an expert, but I feel that these are the areas which will give decent business momentum to the traditional guys. And like you said, there is definitely merit in looking at some of the new age companies, not from the area that it is a new technology or something like that, but I believe that the young generation is more adaptive to some of these new areas, and wherever the companies are really making sense from their economic perspective, their overall modes, we are open to look at that. Not that we have made huge investments in this space, but we are open. We are looking at some names, and let's see if something falls within our framework. We'll definitely look at those.
Okay, so let's draw our attention to PSUs in general. Real re-rating or just a rising tide phenomenon? Is it change of wind or is it hot air?
No, actually, in fact, we will be shortly coming out with our annual note, wherein we have covered some of the data points on PSUs. Overall, for us also, the PSU exposure gradually has gone up this year. And this is again backed by, data which is changed. So when you break the PSU basket down into PSU banks, defense companies, energy companies, power companies, utilities, and let's say the logistics businesses, I think in most cases, what we observed is that not only the growth rates have inflected in few cases, but also qualitatively, the ROCs, ROEs have improved quite a bit significantly. So I think those are the points which we felt that should not be ignored, given the fact that they are in a stage where the order momentum is improving and the balance sheet quality is also getting better, and not that they are as expensive as the other parts of the market. So we have been selective, although not as a basket approach. We are not buying everything, but wherever we feel it makes sense, as I said, in terms of our framework or matrix, we have taken increased exposure across these buckets, what I mentioned.
All right, Vinit, really appreciate your time. Thank you for joining us.